Medicare is just another cost that you might have to worry about in retirement. And the question is, of course, how do you get the most out of your Medicare package? How do you get the most value? Because nobody likes overpaying for anything that doesn't really make sense to overpay for, especially when it comes to insurance. And that's why we got Tim Mickelson to join us here. He's been in the industry through Medicare, helping out with Medicare since 2001. We're going to figure out, how do you get the most value out of Medicare? What are the costs that are associated? What should you be thinking about? And how do you make this decision? Again, my name is MacKelvie. I'm a certified financial planner with Mariner Wealth Advisors. This is Your Life Simplified. Make sure to hit that subscribe button if you're listening on Apple Podcasts, Spotify, YouTube, wherever you might be listening. Tim, what's a good place to start here? Again, we got this cost that maybe 64, 65-year-olds are staring down the barrel at. How do they figure out what they should sign up for? What costs maybe make sense for them?
That's a good question. And, to me, that's where it really boils down to is cost. There's different ways to go with Medicare. A person could use Medicare A and B, add a Medicare supplement plan, as well as add prescription drug coverage, which is the Part D plan. The other option is to go with Medicare Part C, which is called an Advantage plan. And people often refer to that as being A and B and D wrapped up into one package. So really, the question is, which way do I need to go?
Yeah. And Part A, hospital, do you pay for this? When do you have to pay for this? What are the costs that are typically associated with that?
Right. Most people are not going to pay for Medicare Part A. It is something that we prepay through our taxes, our payroll taxes. And
so it's not free?
It is not free.
Okay.
Most of us don't have to make a payment on that. People who have not paid into it over the years could have to pay as much as $499 per month for that benefit. So that's a real benefit we get back for all the money we paid into it over the years. Medicare Part B, pretty much everybody pays something for that. Most people are going to pay the base Part B premium. And for individuals that earn $97,000 or less, that's modified adjusted gross income.
Magi.
And that's Magi. And for couples who earn $194,000 or less per year, they're just going to pay a base $164.90 per month for their Part B premium.
Okay. And that's 2023 rates.
That is 2023.
Okay, so 2024 people can't come back to us a year later and say that we're wrong on that. Those are 2023 rates. Okay.
Right. Correct.
Okay. So there is some cost associated there with Part B, and that's going to be income based. And do you see anybody then? Is there some planning that might be involved there for somebody to maybe not take as much income then, to lower their Medicare premiums? Does Social Security affect this premium, right? Because there's income, there's provisional income with Social Security. Will your Social Security payments affect the cost of Medicare insurance for Part B? That is, I guess, how does that work?
Well, yeah, not necessarily. Those two are directly tied together in that way, but certainly your overall income and some things to think about. And this is really where I get, a lot of people call me and they're surprised down the road is, well, I just got an inheritance or I just sold some property. And although they may not have been hit with taxes on that, all of a sudden they're being told that, they have to pay double the cost for their Part B or even triple the cost in some situations.
Yeah. Which, again, nobody gets fired up about insurance increases, at least from what I've seen. Long-term care is an example of that. Yes, over the years.
Right.
That spike. Okay. So then Part C, it sounds like Part A and Part B. Again, you get what you get. It is going to be determined on, based on income, how much you've worked, but, you're going to have likely A and B. Then you get to Part C, Medicare Advantage, where you're probably going to have a mailbox stuffed full of different options.
Right.
As you start to near that date. Yes, mail is still a thing. The question, of course, is from a value stance, how do you sort through all of these different Medicare Advantage options? What costs maybe make sense to endure for the benefit that you receive?
Right. And in my opinion, and certainly in my local market, you want to talk to an agent probably in your local market, but in my local market, we tend to use the Medicare supplement plans for folks who maybe have a lot more medical issues. Medicare Advantage plans work great for sort of the average health. You may need a rotator cuff surgery or knee replacement, but those plans are still going to work great for those individuals, and those can be much more have value adds to it. So when you're comparing the two, like I said, at least in my market, I feel like you're going to see the same doctors. You're going to get the same care, whether you're using Medicare or a Medicare Advantage plan. At the end of the day, the difference is, what are you paying for that? Mm-hmm. And for somebody who has a tremendous amount of medical issues, to be able to pay, say, $200 or $250 a month and have all of those bills, those medical bills, hospital stays, MRIs, CAT scans, to have those things paid for in full is a value for them.
Right.
For somebody who's really not using much medical care or has the occasional, like I said, hip replacement or rotator cuff surgery, their value may be coming from a Medicare Part C plan where they're not paying so much for the plan, but they kind of pay as they go and they pay for care as they need it.
Yeah. And is there any add-ons then that make sense to consider?
Right. Well, when you're using Medicare A and B, it really is highly recommended that you add a Medicare supplement plan. Medicare itself, A and B, it is tremendous coverage, but it does have some holes. And one of the greatest holes in that is that it does not have max out-of-pocket protection. Mm-hmm. It doesn't limit us in any given year if we have a tremendous amount of medical needs. And that's why adding a supplement can give us that max out-of-pocket protection.
Especially as you're maybe aging, and that's going to become, at least from a prevalency standpoint, a higher likelihood that could occur. But again, that's a bridge that everybody will have to cross on their own and figure out, do I want to add this? But yeah, there's obviously a number of different supplement plans out there. Okay. So then lastly, we got Part D here for drugs, easy one to remember.
Right.
What is the typical cost that's associated for a Part D plan? And when should someone sign up for it? Is it like, hey, I have like a prescription, pain pill, so therefore I should automatically just get Part D? Or is it, no, I will never need any prescription drugs. I'm all, like Eastern medicine. I don't do any of that action. So I never need Part D. I guess, how does somebody know when they should have Part D?
Well, I always recommend that you get Part D right away. Once you become eligible or you join the Medicare world, having Part D, of course, we never know what could be added to, our medication needs over the course of the year, but also we want to avoid late enrollment penalties if we don't have a Part D plan. And then in response to what are the costs, it can be really varied. In Washington, we've got a plan that's just over $1 a month. And we've got plans that are in over $100 a month. Okay. So one of the ways that I start this whole process to figure out what works best for an individual is to run their medications through Medicare.gov. That gives me a baseline to understand, well, does that $1 a month plan or does the $100 a month plan cost them less over the 12 months or how many ever months that they're going to be in it?
Yeah. And is that Part D based on the individual's finances, or is it universal cost? Like, hey, if you're making $5 a year, you pay the same amount as somebody who's making $2 million a year. How does Part D work from a cost standpoint? Obviously, there's different options there, but.
Well, there are some individuals that'll qualify for state aid, special help, extra help, and certainly those who may fall into welfare and be on Medicaid. Those folks usually pay a lot less for their medications, and in fact, some cases can have the premiums paid for them. But most of us are going to have to pay those premiums, and in that case, it's not income based. So, whether you make $50,000 a year or $1 million a year, those prescription drug plans will cost the same for you, and of course, you'll have to pay the same amount for the medications as you receive them.
Okay. Yeah. And so obviously some choices there. And again, I think this is part of the reason why it makes sense to talk to an agent, because there's no added cost, right?
Correct.
Working with an agent, which was a surprise to me. I know I've shared this in the past. You go direct. Let's just say you're like, hey, I'm a DIY guy. I just want to take care of all this on my own. There is no savings there. I mean, you just don't get somebody to communicate with who obviously is in this world and understands everything that needs to be understood, at least I'd assume most insurance agents will, understand the basics of this and can hopefully point you in the right direction. Now, of course, you probably want to find somebody that aligns with your values and you're not, getting pitched all of these different plans that you maybe don't need or want. But still, it's probably worth it for everybody if there's no added cost to have a professional they can speak with, which is why most people do that. From my understanding, they're not just going on and signing up for all this coverage on their own. I mean, that's probably very rare that somebody's doing that.
Right. And there's programs that allow you to go through and navigate through this on your own. But usually what happens is by the time they get done navigating through it, they want to talk to someone and verify that,
it's almost
am I making the right decision?
It's a lead funnel of sorts.
It is.
That maybe would be like a good marketing technique for anybody who's in the Medicare field to consider. Just pitch it as a DIY savings. Then they get in there and they say, wow, yeah, maybe I do actually want to talk to somebody. So obviously some different costs that are associated there. All in, do you know like averages from a cost standpoint that somebody can expect to pay here in 2023? And how much does that maybe vary regionally, just the average Medicare cost for somebody, and what maybe that variance is based on somebody's income?
Yeah, well, regionally here in Washington, we can expect to pay, just the base Part B premium, which is the $164.90 right now, which is national, and then pick up a Part C plan, Medicare Advantage plan that includes prescription drug coverage for $0 additional dollars. So we could potentially be looking at $164.90 per month for our coverage. And that would basically be pretty much all your coverage, your health care, your prescription drug coverage, and in a lot of cases, additional dental, routine vision, hearing aid benefit, athletic club membership. So a lot of extra add-ons. But if somebody's needing a Medicare supplement plan, they would be using Medicare A and B for that. Add a Medicare supplement. Those can range anywhere from, it could be as low as $50 a month up to $300 per month. So add that onto then the prescription drug coverage, and then also adding in the $164.90 for Part B. And it can really start to get up there.
Yeah. So budgeting, then maybe you should expect, like on average, let's just say between like $300 and $500. I mean, what do you think? Like a couple that's looking out at their future says, hey, we want to budget X amount as we're planning for just Medicare insurance. What's maybe just like a range? Is it $300 to $500 per person, or?
Yeah, I don't think it would be bad to prep for, say, $350 to $400 per month, and then calculate in the interest over the years for that as well, knowing that it could be as low as just the Part B premium.
Right.
But the reality is we don't know what's going to happen with our health, and also we have to consider dental on top of that. Do we need to get a dental plan? And so those things can add up, and so it's probably a good idea to approach it in the sense of, well, let's just assume it could be $350 or $400 a month.
Yeah, and from a cost standpoint, do you have the option then, similar to health insurance, where you can have the high deductible plan and it costs less, or a low deductible plan? Do you have that option with Medicare?
Yeah, it's it's what's interesting though is that the deductibles are very low, and with many of the most of the Medicare Advantage plans, there is no deductible at all.
Yeah, okay.
So we're really looking at pretty good coverage, pretty significantly good coverage, whether we go with the lowest cost plan versus the highest cost plan. So, these plans are outstanding.
And do you see that cost significantly changing in the years ahead? And I guess as you maybe look outward, is it, hey, just expect this to go up with inflation, or have these costs remained stagnant as far as Medicare insurance costs? We know health just expenses have gone up, obviously, but from an insurance stance, should we budget inflation? Is it tied to inflation, or is this something that's going to maybe remain relatively flat in comparison to inflation because it's so subsidized by tax dollars?
No, I would say that we see about 3 to 7% increase each year. And if you look at how much Medicare cost shares go up, also look at how much are the Medicare supplement plans going up in cost each year. So we can kind of use that as a baseline. But yeah, it's tied to the healthcare and probably healthcare CPI.
Yeah. Last question here, since we're in the state of Washington, who in case anybody hasn't heard of this, they actually pushed through a long-term care tax because of really some tax shortages, Medicaid, I would say funding shortages to take care of long-term care needs. And so they passed a tax, which basically was going to place into effect a long-term care state-run plan. You could get out of that plan if you had existing long-term care insurance. There was a number of nuances associated with it, but something like that tells me, okay, Medicare, Medicaid, which are a little bit different, obviously, but there's maybe a shortage on funding from a tax standpoint. Do you think that long-term care, as people are living longer, do you think that long-term care facet of this entire equation is something that could, really change as we look at the outlook for Medicare going forward, to where, people that are retiring now, they don't have any long-term care benefits, but states more and more are going to consider adding this as an additional tax? I mean, I guess I'm curious what your thoughts are on that, because that was a big topic of conversation here in Washington. For those who don't live in Washington, this is a conversation that could be coming to your state very soon. I know a lot of states are looking into it. We're kind of the test subject, but I'm curious what your thoughts are on that.
Yeah. So when it really comes down to it, Medicare is really half of your problem. Yeah. Right. And it's going to be solved because we're all going to choose to go with the Medicare plan and provide that, get that coverage for us. So it doesn't, Medicare, a medical need doesn't bankrupt us. But a lot of us don't think that long-term care is that important. That's down the road. That's not an issue, or,
nobody likes to plan for their own demise.
Right.
That's a tough one.
Both risks, I think, are very similar. Although we would never consider not having health coverage, a lot of us do choose not to go with long-term care. I am not a long-term care insurance expert, but I highly recommend that you look into it and see how can I get that provided for me. To think that the government's going to provide that for you down the road, even with Medicaid, this tax, this tax that's coming in, is it's not the solution. I think it's a step in the right direction, probably, but it's something that we really got to look at for ourselves.
Yeah. Well, there's just a shortage in funding, and we know that behaviorally people aren't signing up for this. And, there's just not enough money basically to take care of their end of life health insurance needs. So it'll be interesting to see what happens there if this maybe gets bundled more and more with taxes into the equation going forward. Maybe for folks that are about to retire or are retired, this isn't as big of a conversation, but I thought it was worth maybe bringing up. So we'll appreciate you, obviously stopping by here. Again, my name is Michael MacKelvie. I'm a certified financial planner with Mariner Wealth Advisors. We were joined by Tim Mickelson, Medicare specialist, Medicare agent. We'll leave Tim's contact information just in the description in case you guys have any questions, but hope you found this helpful. Again, make sure to subscribe wherever you're listening to this, Apple, YouTube, wherever you might be listening to this. You guys take care.
Mariner Wealth Advisors, or MWA, is an SEC-registered investment advisor with its principal place of business in the state of Kansas. Registration of an investment advisor does not imply a certain level of skill or training. MWA is in compliance with the current notice filing requirements imposed upon registered investment advisors by those states in which MWA maintains clients. MWA may only transact business in those states in which it is notice filed or qualifies for an exemption or exclusion from notice filing requirements. Any subsequent direct communication by MWA with a prospective client shall be conducted by a representative that is either registered or qualifies for an exemption or exclusion from registration in the state where the prospective client resides. For additional information about MWA, including fees and services, please contact MWA or refer to the Investment Advisor Public Disclosure website at www.advisorinfo.sec.gov. Please read the disclosure statement carefully before you invest or send money. The views expressed in this podcast is for educational purposes only and do not take into account any individual personal, financial, legal, or tax considerations. As such, the information contained herein is not intended to be personal, legal, investment, or tax advice. Nothing herein should be relied upon as such, and there is no guarantee that any claims made will come to pass. The opinions are based on information and sources of information deemed to be reliable, but Mariner Wealth Advisors does not warrant the accuracy of the information. The guest today is not affiliated with Mariner Wealth Advisors, and their opinions expressed are their own. Certified Financial Planner, trademark, CFP, registered trademark, and federally registered CFP with flame design marks, collectively the CFP registered marks, are professional certification marks granted in the United States by Certified Financial Planner Board of Standards, Inc., also CFP Board. The CFP registered trademark certification is a voluntary certification. No federal or state law or regulation requires financial planners to hold the CFP certification.